Ladies and gentlemen, good day and welcome to the SMC Global Securities Limited June 2022 result discussion conference call. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Anup Sonpal from Valorem Advisors. Thank you, and over to you, sir.
Thank you. Good evening, everyone, and a warm welcome to you all. My name is Anup Sonpal from Valorem Advisors. We represent the investor relations of SMC Global Securities Limited. On behalf of the company, I'd like to thank you all for participating in the earnings call of the company for the first quarter of financial year 2023. Before we begin, let me mention a short cautionary statement. Some of the statements made in today's call may be forward-looking in nature. Such forward-looking statements are subject to risks and uncertainties which could cause actual results to differ from those anticipated. Such statements are based on management's beliefs as well as assumptions made by and information currently available to management. Audiences are cautioned not to place any undue reliance on these forward-looking statements in making any investment decisions. The purpose of today's earnings call is purely to educate and bring awareness about the company's fundamental business and financial quarter under review. Let me now introduce you to the management participating with us in today's earnings call and hand it over to them for opening remarks. We firstly have with us Mr. Subhash Agarwal, Chairman and Managing Director, Mr. Mahesh Gupta, Vice Chairman and Managing Director, Mr. Ajay Garg, Director and CEO of SMC Global Securities Limited, Mr. Himanshu Gupta, Chairman and CEO of Moneywise Financial Services Private Limited, Mr. D.K. Agarwal, CMD of SMC Capitals Limited, Mr. Anurag Bansal, Director of SMC Global Securities Limited, Mr. Pranay Agarwal, Chairman and CEO of Stockscart Moneywise Finvest Limited, and Mr. Vinod Kumar Jamar, President and Group Chief Financial Officer. And I request Mr. Vinod Jamar to take you through the financial and operational highlights of the company. All over to you, sir. Thank you.
Thanks, Anuj. Good evening, everyone. First, let me take you through financial performance for Q1 FY23 of our company on a consolidated basis. The operating income for the quarter was INR 291 crores, an increase of 13.8% year-on-year. Operating EBITDA was reported at approximately INR 71 crores, a decrease of approximately 6.3% year-on-year, and the EBITDA margin stood at 24.4%. Margin declined due to higher administrative expenses in Q1 23 vis-a-vis same period a year ago, when many offices remained shut and employees were working from home due to COVID-19 pandemic. Net profit after tax reported INR 37 crores, a decrease of 22.6% year-on-year, while PAT margin are 20.74%. Let me now take you through quarterly segmental performance on a consolidated basis for this quarter. In the broking, distribution and trading segment, the revenue for the quarter was about INR 199 crores, an increase of approximately 7% year-on-year. The EBIT for this segment was INR 47 crores. Coming to insurance broking division, the revenue for the quarter recorded was INR 74 crores, which increased by around 37% on a year-on-year basis. The EBIT was approximately 1.5 crores. Company focused on hiring a technology team to strengthen the IT infrastructure in this division. Lastly, in the financing division segment, the revenue for the quarter was INR 33 crores, an increase of about 47% on a year-on-year basis. The EBIT for the quarter was approximately INR 18 crores, an increase of about 43% on year-on-year basis. NBFC loan book increased to INR 716 crores in Q1 FY23 from INR 562 crores in Q1 FY22. Gross NPA and net NPA decreased to 2.58% and 1.49% in Q1 FY23 from 4.75% and 3.05% in Q1 FY22 respectively. With this, we can now open the floor for the questions and answer session. Thank you. Anuj?
Sir, shall we open for the view Q&A?
Yeah.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touch-tone phone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Anyone who wishes to ask a question may press star and 1 now. First question is from the line of Saket Kapoor from Kapoor Company. Please go ahead.
Yeah, namaskar, sir. Sir, if you look at your revenue mix for the quarter, especially for the broking, distribution, and trading aspect, do we have any mark to mark of our proprietary business? What is the key reason for the lower segment profit for this quarter when we are comparing with the June quarter? And if you could give the breakup or mix between what was the broking amount, brokerage and the trading.
Ajay, broking and trading, sir.
Very good afternoon.
Good afternoon.
Ideally, the quarter one had been a bit dull as compared to quarter four, and the broking revenue had been around 153.17 crore, and trading revenue had been around 45.97 crore. So in the Q4, these figures were 138.61 crore in broking and 50.45 crore in trading. So there has been a minor increase of 5% as compared to Q4. Despite of Sensex being down and the market being dull.
And sir, the profitability front, can you provide the breakup? The total PBT for the segment is 47.31 crores. So the split between broking and the trading part?
It is around 75% for broking and 25% for trading part.
Okay. And so this also includes the open position being mark to mark for trading purpose?
Yes.
Or all the positions are remain closed? There should be open position.
Yeah, this is Dr. D.K. Agarwal. So we mark to market open positions, and whatever mark to market is there, that is accounted.
Right, sir. And what should be the book size, sir, for the prop book as on 30th June? That remains open.
It keeps on changing, but it is around 300 crore.
Okay. And if we take the breakup of the same, sir, which segment are you really skewed into? Is it the large cap part wherein the FNO is there to hedge, or do we have the cash or the mid cap cash market for position also?
This is basically arbitrage positions we take, which are hedged. So these are not these are based on strategies, various like cash future arbitrage, conversion strategies, butterfly trading, volatility based arbitrage, statistical arbitrage, pair trading. So all the positions are hedged in that way. Most of the positions are hedged.
And sir, can you provide us with the margin requirement? With now the margin requirement increase and the cash component being introduced, so to generate these revenue in your trading book, what kind of margin requirement is currently there? If you could quantify on a day, the highest margin which is there in terms of the strategy which you are doing, that since you are having a hedge position, that means you have to incur margin on both sides?
Yes. So basically, the margin, keeps on varying. But generally, it is around 235 crore, 300 crore, like that.
Okay. And that is also sourced completely from, that is our self-owned fund, or that is also borrowed on at competitive rate?
In-house funds are there.
Correct. And about the land which we purchased for our new offices, any update on the same, sir? How are you proceeding?
Yeah, we have already, in previous quarters, we have explained that we purchased a land at Mohan Cooperative Society. It's more than 3,000 yards, and we have taken loan against that also. So 75% as of today we have taken loan, and 25% we have invested our own fund.
Okay. And have we started work on the same, sir?
Yeah. All plans has been taken place. So that testing that has been done, and soil testing, and we are soon going to start the construction very soon.
Correct, sir. Sir, on the buyback front, out of the total proceeds as on date, how much, I think we have given the announcement, how much have we spent? And sir, for the tax benefit part, are the shareholders will be availing that capital gains benefit tax? That clarification from the exchanges are being received?
Any investor who is buying the stock, who is selling the stock, will have the long-term capital gain benefit, long-term and short-term both. Yeah.
Hi, this is Himanshu. So basically, as per the exchange notification of last year, so any shareholder who has sold the stock and his shares get matched against the company buyback, so he would get direct communication from the stock exchange on his registered email ID, and basis that he can claim the exemption, full exemption from the income tax on that particular transaction.
Right, sir. And how much have we spent as of now, and by what time will we be completing this buyback?
Around 53 crore we have spent it. More than 60 lakh shares we have purchased till today.
Okay. And what is the size, sir? Which
75 crore we have to buy back.
Okay. So we will be making full. Okay, so we will be making use of the full money, or since 90% होने के बाद we can also close earlier than that.
We will do up to 75 crore. I think we will spend full 10-20 lakhs lesser, but otherwise we are spending full amount.
Correct, sir. Sir, on the cost front, which are the line items, sir? Any one-off items in your expenses list, whether in the other expenses that has occurred for this quarter, or they are all linear subject to your revenue?
The other expenses, office administrative expenses have increased because last year Q1 we had the offices closed and working from home. So obviously electricity and all these related administrative expenses on the presence of staff were not there, and this quarter that is there. But that is a normal thing. It's not something extraordinary because earlier also full office was working and the expenses were incurred. So expenses have not increased if we compare with the pre-COVID expenses. It's only with reference to Q1 only, which was working from home.
Sir, when we take this line item impairment of financial instrument, how do we derive this? Which instruments are being impaired? If you could throw more light on the same. What is the size? I think so last year it was total figure was 16 crore, and for this quarter it is 3.44.
Yeah, you see we have NBFC arm, so we provide loans to the customers. So out of the loan, there are certain NPAs also. So as we explained that the NPA level has decreased a lot to 2.58% and 1.49% gross NPA and net NPA as compared to 4.75% and 3.05% in the last year Q1. And apart from this, there could be few other bad debt provisioning based on ECL model, because we have large debtors outstanding in the books. So as per the statistical model, there is some part of provisioning there also.
Correct. Right, sir. So yes, sir, I will try. I'll come in the queue for my follow-up.
Yeah, thank you, Sandeep.
Thank you.
You raised very valid and good questions. Thank you very much.
Thank you, sir. Yes.
Thank you.
Yes. Thank you.
A reminder to all the participants to press star and 1 to ask a question. The next question is from the line of Devansh Mehta, an individual investor. Please go ahead. Mr. Mehta, I have unmuted your line. Please proceed.
Yeah. So my first question is on the insurance segment as to why are we seeing a stagnant growth rate, and also margins have come down this quarter?
Hello.
Yeah.
Devanshu, this is Praveen Agrawal. Yes, you're right. Question is right. Actually, insurance business is seasonal business. Last quarter is always better than previous 3 quarters. We cannot compare first quarter to last quarter. But just we can see we have grown, and if we compare with last quarter in June 21, June 22 with June 21, we grew 37% year-on-year basis.
Understood.
Yeah.
So my second question would be on the NBFC segment. So the company is seeing good growth on NII and NIMS, but AUM has not grown much. So can you explain why so, and what is the company doing to increase the loan book, as the competition has seen very healthy growth in the last quarter across most companies? So if you have any comment there.
Yeah. Hi, this is Himanshu Gupta. So our AUM during the quarter has actually gone up to 717 crores as against 690 crores at the end of March 22. And during the quarter, we have made a disbursement of about 120 crores. So the business has actually picked up, but there is a very fast amortization on our existing loan book. On a monthly basis, we are having collections of about 36 crore rupees every month. So there is some part of the book which is amortizing very fast. So that is the rub-off effect that is there, and therefore you see the book is not increased by that large amount. However, we have seen the credit quality has improved, and gross NPA and net NPA have gone down, as Mr. Jamar told a while back. And to increase the book further, we are actually increasing our distribution strength in the locations that we actually opened last year by hiring more sales team and adding some spoke locations around our branches. And we are also starting with a new product, gold loan, which we have actually started through a tie-up during the quarter, and we plan to have exclusive branches to have the gold loan. That will also add to the business.
Got it. Also, my final question, so can you talk about the super app that has been launched, and what is this? Like, how is it different than StockScart?
I will just put a precedent to this, because Super App is a different brand, a new age brand launched by StockScart. It's actually I talked about StockScart 2.0 in the previous quarter, call, and I said that we are going to revamp our technological front from front to back, and this is a step towards StockScart 2.0. Our first product is Super, and shortly we'll launch other products which will enhance our customer experience. For that, I think I'll also introduce our group CTO, Mr. Bhushan, who is playing the pivotal role to drive our technological advancements group wide. So I think Mr. Bhushan will take over and further answer your questions.
Many thanks, Pranay. So hello all, Bhushan Sonkusre here. To answer your question, just to add on what Pranayji said, the Super app is launched for StockScart Business, which is our discount brokerage, and that is the first milestone of our transformation journey, right? And it is currently launched in the beta stage. There are three things which I would like to highlight, which this app will do different than the previous ones, right? So first focus would be lightning fast, super intuitive, and end-to-end user experience, the consumer experience. The second is we're going to use a completely different new digital technology stack. So we have now chosen the stack which has been used by most fintech firms locally as well as globally. And then the third is we want to leverage the legacy and the USP of SMC Group into this play rather than just copycatting something, which is bringing the brokerage distribution and other aligned digital products through this single app window. So these three are clear differentiators.
Fair enough. Understood, Bhushanji. Thank you. That was very insightful. That's all from my end. Thank you.
Thank you.
Thank you. Anyone who wishes to ask a question may press star and 1 now. The next question is from the line of Karan Bhanushali, an individual investor. Please go ahead.
Hello, sir. Thank you for the opportunity. Can you tell us what are the revenues for StockScart for Q1, and if you could quantify the profit and loss for the quarter as well?
Just hold on.
Yes, sir. Yeah, StockScart revenue was 597 crores and profit after tax was 64.67 lakhs. 5.97 crores and profit after tax is 64.47 lakhs.
Okay, and why has there been a significant increase in interest costs on both YOY and QOQ basis?
As you have seen, our NBFC loan book has increased to 716 crores. So obviously, our leverage was very low, so we borrowed the money from bankers and then distributed. Still, we can further leverage it as our debt equity ratio is quite comfortable. So obviously, the interest cost has gone and simultaneously interest income has also gone up.
Okay, and so what is the reason for depreciation coming down in Q1 versus the previous quarter?
It's the impact of WTV coming down. First year, if you buy new asset, the depreciation is say at 40%, then next year it comes from 60. So that is the impact.
Okay, and so in the NBFC segment last quarter, the management said you all are getting into gold loans. Can you talk about how that is progressing and how is the management, what's the management strategy to compete against other large peers who have been into this segment for a while?
Sure. This is Himanshu. So basically during this quarter we have initially launched gold loan in tie-up with one of the existing NBFCs to a co-lending type of partnership. And going forward, we would be having opening our exclusive gold loan branches for the building the distribution strength on our own. As you said, like competing with the existing players, so we believe market is very big and there is a very large opportunity. So this being a secured retail loan product, we are very bullish on this product. And initially, we would be opening branches in the Delhi NCR region. And after some time, when we have
looking at the progress, we would be expanding to other locations.
We have started with, as I said, in tie-up with other NBFCs, we have initially started with few branches in the West Bengal region as a pilot.
Okay, sir. Okay. Thank you so much. That was very insightful.
Thank you.
Thank you, Bansali. Karan Bansali.
Reminder to all the participants to press star and 1 to ask a question. The next question is from the line of Atul Prakash, an individual investor. Please go ahead.
Hello. Actually, I just wanted to understand, we have a full service brokerage business, we have a discount brokerage business, we have NBFC business in which we are also doing the gold loan now, and the buyback introduced at 150. However, basis all this and the peer, we take the peer, the valuation of our company is not at the right place. So what exact reason you see where we are lacking?
Yeah, I could not understand.
Shall I repeat?
Yeah, it depends upon the investor. Mr. Atul, question is, market is not in our control, and it depends upon the investor how much price it should be there. We can say that we are doing well, and I don't want to comment why price is lower, but you can think yourself.
I just wanted to know anything which we should be doing where market is saying that is lacking at our side. Because if we take the NBFC business, then also our valuation is low. If we take the brokerage business, then also our valuation is low.
See, this is D.K. Agarwal. See, what you can do is do the right thing. And being in the industry and being in different verticals, all our verticals, we are putting our best, and things are happening as per our plan. So, in our control, whatever is there, we are doing that. The valuation, when you do the right things, valuation will automatically happen. This is what we believe. So, because that is not something where we focus. We focus on our business, and our business is doing that.
Just also wanted to add the NBFC part on the gold loan side. So how we are seeing the market, as there is a lot of players in the gold loan business, and what are our strategies to going forward on the same?
Yeah, you are right. A lot of NBFCs and banks are getting little aggressive on the gold loan, particularly post-COVID era. But we believe that market is very large, and so initially we would be opening our branches, and we would also be doing digital marketing and the gold loan at home business going forward. So we would be doing omni-channel sales to get the business from the market. And I think our cost of fund is also very low, so that will help us in competing with other players in the market, particularly the new NBFCs which are coming in this business.
Okay. Thank you.
Thank you. Reminder to all the participants to press star and 1 to ask a question. The next question is from the line of Achal Biyani from Yes Bank. Please go ahead. Hello, sir. We have lost the line of Mr. Achal Biyani. In the meanwhile, Mr. Saket Kapoor will ask the question from Kapoor and Company. Please go ahead.
Yeah. Thank you for the opportunity, sir. When investors look at the numbers or look at an investable proposition in companies, especially the ones which are where the profitability is dependent on the financial market. So, sir, how should one look at the consistency in your numbers in the different verticals? What kind of business model have you set up that there would be consistency barring unforeseen circumstances? how have you created the model wherein we can expect consistent numbers from your business, because it is entirely dependent upon the financial market, and all the components are linked to the same on the same aspect.
Mr. Kapoor. Yeah, Mr. Kapoor, I think it's a very good question. Because for any organization, it is very important that there should be continuity, there should be sustainability and consistency. So our business model is like that. It's a low-cost business model where we have a lot of franchises across the country. Secondly, we have different verticals. Like we are into brokerage, we are into investment banking, we are into insurance broking. So many of these businesses, they take care of the volatility or fluctuation in the economic cycle of the country. So what we believe that our model is quite stable and quite diversified, and it is a low-cost model, which will ensure that there is consistency in the business. Of course, unforeseen circumstances nobody can judge, but otherwise we believe that we are going to grow consistently and continuously.
So when you mention low-cost model, can you explain how do you define a low-cost model?
Mr. Sanket, this is Subhash Agarwal. When we say low-cost model, basically when we have franchisee. So we don't have direct cost on our franchisee. We just charge them brokerage and share them brokerage. So and whereas in branch model, you incur directly costing. So when your volumes are dipped, then this branch model and mix of branch and franchisee model works very well, because at good times you are there through your branches, you can increase your revenue, you can increase your penetration, and whereas we have arbitrage system also. So arbitrage works balancing of everything. So and other segment, as Vicky Agarwal said, we have NBFC, we have insurance broking, we have real estate broking, we have this NBFC investment. So third party distribution and other segments also. So it works very well in all times. It had one business had other business.
Sir, if you take the geographical distribution in terms of the franchisee model and also the branches, where are we concentrated, and which are the areas where we need to improve our presence?
We have maximum exposure in northern India. After that, eastern part of India, and then western part of India, and the least presence in the southern part of India.
And is it so what could be the key reason for southern having a lower penetration, or what steps are we taking to improve our presence?
We have tie-up, various banks tie-up also. So, and we are increasing our team size in southern part. I am more specifically Mr. Ajay Garg, who is CEO of our SMC, Global Securities Limited. He will speak on that.
Hello.
Yes, sir.
Yeah, we have last year only we have done tie-up with Karur Vysya Bank and Dhanlaxmi Bank, and a couple of more banking tie-ups are going to be there in the near future. So, and we are increasing even number of branches and even number of franchisees in southern region to strengthen our southern part. And besides that, we are doing digital marketing, influencer marketing. So when you do the digital marketing, the business comes from around India. It is not location specific, and then our presence would be there in a better way. And with this prestigious tie-up, our image in South would improve day by day, and our market share in South would also increase gradually.
And sir, lastly, 2 more points. So firstly, about this government securities market. Of late, the RBI has offered this retail participation through their own website, but that is not garnering larger interest. So, in order to deepen the bond market, what kind of role do SMC can play, or can we can facilitate so that this market, which is nascent and somewhat secured in terms of the sovereignty part, could add value, and not only it could be a win-win situation for the government as well as for you garnering more clients, the ones which you will be addressing through the GSEC platform for RBI, and thereby offering your buffet of other products. So this could offer a good proposition, since what I have understood or read about this portal from RBI, it has not grabbed the attention which it should. It is a big market in terms of government securities and SDLs, also state development loans that gets usually auctioned in the market. So that was my small suggestion, if it makes sense for us. And secondly, about this arbitrage part also, sir, when we look at the arbitrage mutual funds, they are able to, even if we take their expense ratio, they are earning anywhere 0.4 to 0.5, 50 basis point on a monthly basis at max. So how different are how does the strategy, this strategy works out, that it is only the secret juice is with us, that we are able to create this kind of good numbers, if I may use, from the arbitrage deck, and big mutual funds are unable to translate that profit? What is the area where we are able to garner this profit from?
Okay, thank you for your question. So first of all, your first question regarding the debt market penetration, this is Himanshu Gupta. So I think you are very right. In spite of RBI allowing the retail investor to directly trade on the RBI portal for GSEC, still there is the momentum is not there from the individual investor side. Though we are an early mover, and we have a full-fledged debt desk in SMC in Delhi and Mumbai region. So we are already catering to this segment. The gap, what we see is the investor is not aware about how to trade in the debt securities, and particularly because this is approachable through the banking channel only. So banks are even not promoting the individual investor to open the account. So there is a gap in the information and the push into the market. But anyways, what we are offering to the investors, that we can buy the government security on the portal and then sell it to the individual investor in his demat account. That facility is available, and the investors are willing to buy the government securities apart from the corporate bonds also. We have seen higher momentum from the HNI investor segment, particularly during the last 2-3 years, particularly when the interest rates were going down in the market. So people were moving their investment from fixed deposit to the debt segment. So this is our take on the debt side. And for your next question regarding the arbitrage fund, Dr. E. Agarwal will take that answer.
Yeah, Mr. Kapoor, you rightly mentioned that these arbitrage fund from various mutual funds, we know, they have been giving a return of 4 to 6%. Because when you do arbitrage in a fund, there are many limitations. There are limitations in respect of you can't do intraday trading. That is one. Secondly, because of that reason, the churning does not happen.
Only vanilla.
Right. Only vanilla arbitrage can be done. Secondly, the leverage. When you are doing arbitrage in a mutual fund, then the leverage is not possible. You have to you can't take that leverage. But in case of proprietary arbitrage, which we do, you can take leverage, and only basis the margins you can take the position.
Very specific.
So that helps in multiplying returns. The churning which happens intraday, that also helps in multiplying return. And then they are bound by many constraints. They have a IM, and they can do only those strategies which they have given in the IM. There are many strategies like conversion reversal, box, which they cannot do because of margins limitation. So the return which an arbitrage fund makes and the return which a proprietary arbitrage would make, there would be a substantial difference, and that difference is the main reason which I explained. Yeah.
So what are IM stands for, sir?
What?
You mentioned the word IM. IM stands for?
Information memorandum, which they have to submit to the SEBI. Any like what strategies they will do. So you have to send the rule books, basically what you will be doing. So all you have to define the strategies which you will carry out when you submit for a scheme. So that document which outlines what all you will be doing, where you will be investing. So that document I refer as IM. Information memorandum.
As you mentioned, sir, our side. Yes, Bodhi.
Yeah.
You were telling something, sir. I interrupted you.
You were asking something.
Sir, I was saying that if we look at your book size for proprietary arbitrage fund is around 350 crore. You mentioned that is what the
not. It keeps on varying. Sometimes it is even 200 crore, 250 crore, 300 crore. Because what happens that when whatever proprietary surplus we have, we deploy that fund instead of keeping it idle. We use whatever arbitrage opportunities arises. We use that fund available with us to deploy into arbitrage strategies. So the fund, deployment of fund keeps on varying depending upon the availability of the fund with us.
And sir, if you look at the market size of this opportunity, just to understand how many players and what could be the big resultant figure. If you look at, if I may ask that, if you look at the market share of, say, what the type of strategies which you deploy to create arbitrage opportunities, what could be the entire market size of it, wherein you are garnering 350 or 400 crore. टोटल स्पेस कितना बड़ा है सर, जिसमें नंबर ऑफ प्लेयर्स इसमें ये स्ट्रेटजी में अर्न करते हैं?
Right. So I would not have the number, but I can tell you, if company gives me another 1,000 crore or 2,000 crore, 5,000 crore, even that can be deployed.
Okay. और सर इसका डायरेक्ट कोरिलेशन आपके ऑप्शन सेगमेंट से ही है? दिस इज द बिकॉज आई थिंक द मनी फ्लो इज मैक्सिमम in for the option strike prices. So there is the way.
You are right. Most of the strategy happens in options, but there are many strategies where cash futures, even there are strategies in commodities, arbitrage also. There are a number of strategies which can be deployed for arbitrage. So of course, options is a major component, but like cash future arbitrage, I said, cash to cash arbitrage. There are many strategies where even options are not used. Pair trading strategies, then some statistical arbitrage. So there are quantitative strategies. So there are strategies where even we do not use options, and then there are strategies available.
And herein, sir, everywhere we are locking the spread at one go only.
Yeah,
it is not that we have to change.
Everything is automated. We do our arbitrage through algo trading. So it is. It is mostly automated trading. So everything happens through the automated software.
Right. So at no point we have any open position. So whatever be the.
Mr. Kapoor, I would request you to read.
Ma'am, I will come in the queue. Only I was just completing my point,
yes.
If I may.
Yes, please.
Yes, sir. So at no point we have any open position. Whenever the algo trades are put into, both sides are.
Principally, we do not keep any open position, but there are strategies, quant-based strategies, where we can have some open position, but they are all based on some strategy. Like corporate actions are there. There are certain quant strategies. So there could be some open position, but majority of our positions are always hedge positions.
ठीक है सर, धन्यवाद. Thank you.
Thank you. The next question is from the line of Achal Biyani from Yes Bank. Please go ahead.
Hello. Good afternoon, sir. So I would want to know on the PCM front. So as we know that you also have a PCM license in place. What kind of developments are being done with the changing regulations of allocation of end-client collateral? Additional cost burden which you might have to face in future because of these changes, and what are the income sources? Because we see very negligible clearing income in your P&L. So,
Yeah.
if you can update on the PCM front.
Yeah, Amajad, actually, we are clearing and trading member, so all the regulations ideally we are complying for, and even for allocation from today, the penalty is going to be imposed. So accordingly, we are uploading the things as per the exchange guidelines. So compliance is the first thing. Like even our CMD says that it should be on the top priority. So we are doing that. And as far as PCM is concerned, like we are not that big in PCM, though we do have more than 200 trading members who are taking clearing services from us. But you rightly said that it is not that remunerative. But we are still, like with all the exchanges, even we are a member of this India INX and NSE ISSC. Even there we are clearing member. Even we are the member of DGCX. Even there we are the clearing member. So as a brand, like we want to focus on that, and I think in time to come it should be a remunerative segment for us.
Okay. Any additional heavy expense you are expecting because of this change?
No, it is an ongoing thing because the front office vendors and back office vendors, even they know they have to comply, so there is no much additional expense. The only thing is that we have to deploy our back office resource and we have to coordinate with the vendors.
Okay. So a few questions on your prop trading front. As you said that you are majorly into arbitrage and you are doing FNO and cash FNO hedge trade. At any point in time, is there any directional trades which you undertake on an opportunity basis? And second, there is a good amount of investments, quoted investments, which is seen in your balance sheet. So, what are these a part of strategies which you are deploying, or these are invest and hold the invest and wait for the right opportunity to sell it off?
Whatever investment you are seeing in the balance sheet, that is, those are the investments. And whatever we are doing in arbitrage, those are the part of the arbitrage strategy.
Okay. There is no scope of any kind of directional trades which is being undertaken.
Whatever directional is to be taken, that is in the investment part of the business. And in arbitrage, it is based on certain strategy.
Which is FNO driven?
Not FNO, you can't say FNO only, because there are corporate actions also happening. So some directional trade could be based on the corporate action.
Okay. Sir, a few questions on your group companies. So as you said that your NBFCs are trying to expand into the gold loan financing. First is what will be your USP to compete with big players like Muthoot and Manappuram, because they have a pan-India presence. How are you targeting that same audience? Second is on the NBFC performance front, what is the GNPA levels as of now, and what is the average yield which you are charging to your customers?
Okay. So I'll answer your questions in the reverse order. Himanshu here. Our gross yield on the portfolio would be around 15 to 15.5% that we are charging blended across all the products. As you know, the interest rates have gone up recently in the market, and we have passed on the interest rate hike to our customers on the floating rate products.
Okay.
Talking about the GNPA, March 22 GNPA numbers were about 2.8%, and that has come down to 2.4% during the quarter. As I said, their collections have been better, and even you will see that in the overall, like in the market. And coming to your first question regarding the gold loan, so we believe the market size is very large, for the gold loan product, and obviously the competition would be there, but that is a healthy competition, and we would be focusing more on the northern India part initially. And the larger players, Muthoot and Manappuram, they are concentrated more on the southern part of the India, though they have presence in North India, but I think that would be an advantage to us. And as I said, the cake is very big, and there is share for everyone.
Okay. So, a few questions on the stress level books only in the NBFC. Are there any restructured assets in your book?
Yes, there are restructured assets in the book as part of the restructure policy that RBI had came out during the COVID period. And as of March 22, the restructured book was about I think 22 or 24 crores. That was the book that was restructured, but standard book. But the restructuring was done under the COVID policy of the RBI.
Okay. So now on the other group companies which are there in the same group. First is on the discount broking business. Losses.
Achal, there is a disturbance from your line. Could you please repeat your question?
Yeah, am I audible clearly now?
Yes.
On the discount broking business, we see you are still making losses till FY22. So what is the development on that front? When are you going to break even in the discount broker? How are you competing with Upstox and Zerodha? And on another group company, you also had a group company called SMC Global USA, which as per a few previous years' financials will show that the investment amount has been written off because of some issues in that company. Can you throw some light on that?
Hi Achal, so I'm Pranay Agarwal, CEO of StockCard, discount broking arm. Yes, so basically I think Mr. Vinod Jhamar ji already put forward the individual financial statements of our discount broking arm. In the quarter, we made a profit of 64 lakhs profit after tax and profit before tax of 87 lakhs. So I'm very happy to inform that this quarter we are able to not only turn it break even, but we are able to achieve some profit on the back of revenue of 6 crores. So that is because of increased ARPU. We have focused on our strategy is different. We are focusing on revenue generating clients. We are focusing on increasing our ARPU, and that is around 4,000 rupees per client. And I think that would be on the higher side in the industry. So going forward, we have positive outlook for this, and with the new technological revamp we are taking place, this will be increasing day by day.
Okay.
For the USA, I think
actually we opened the branch in USA and we transferred fund there, and we were planned for ADR and everything, so we thought that we must take the license of their USA also. But the person we kept as a manager, he did not do well and he has suffered losses, and so that is why we have closed the branch. So now it is inoperable. So we have to, so it is a subsidiary, SMC Global USA, and now we are in the closing that branch process.
Okay. Has the entire amount of SMC Global USA investment been written off as on date in SMC's book?
Around 5 crore or something that has been written off.
This has been written off in Q1 or earlier periods only?
Mr. Jhamar, who is our CFO, he will...
Write-off requires certain RBI procedure, so we have provided for fully, but it is in the process of writing it off.
Okay, so entire amount has been written off.
Provided for. The formal
provision has been made, but we have not yet written off.
Formal write-off will be with RBI permission, so that is in process.
Okay, sir. Yeah, so thank you so much. That was from my end.
Thank you. A very good question to you all.
Thank you. As there are no further questions from the participants, I now hand the conference over to the management for closing comments.
Yeah, good evening to all. Myself Mahesh Gupta. Thanks you all for participating in this earnings phone call. I hope we have been able to answer your questions satisfactorily. If you have any other further questions or would like to know about the company, please reach out to our investor relations manager at Valorum Advisors. Thank you. Stay safe and healthy. Thank you very much to all.
Thank you. On behalf of S&P Global Securities Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.